market outlook. I'm sure your crystal ball is broken. Mine's been broken for a while. Um, but Fed's fighting inflation, and they've been very adamant on doing everything they can to get inflation down to like 2%. At least from my observation, it seemed like maybe they thought they were on the right track, and then boom, numbers picked back up again. Which at least on the single family side, we've seen mortgages pick back up. I mean, it's not 100% correlative, but there is some relation. So where are you seeing the multifamily market over the next 18, 24 months as far as, well, let's not go that far out. Maybe 12, 18 months as far as valuations and buyer sentiment, this whole bridge gap between seller expectations and buyer expectations. What are you seeing?
So I talked to a lot of syndicators. A lot of syndicators seem to think that in the next 6 to 9 months, there's going to be a lot of deals that are going to be coming to market that are in trouble because bridge loans were provided on these deals, and they were 2 or 3 year bridge loans, and they're going to be coming due. And with interest rates going up, they're not going to be able to refinance, and so they're going to have to sell at a discount. That very well could happen. I'm not really sitting there, thinking that that's hanging my hat that that's going to happen. And look, all investments are cyclical. I know I've seen real estate go down, and when it goes down, it typically stays down for 1, 2, 3 years. But what I've seen since being involved in this market is that I'm a believer, like longer term, medium to longer term, that multifamily is just a fantastic asset class. So that's why I want to have a loan on the deal that's at least 5 years out. So I can, if it goes down, you could ride through that down period and come out the other side. But I'm a big believer that multifamily asset values will continue to rise. We may have a dip that comes, but so I'm still bullish on it. There's a huge affordability gap right now. What does that mean? It's the gap between, okay, if you were to buy a house and put 20% down and get a 7% mortgage, what would your payment be versus, what would it cost to rent?
Yep.
And, it's at all-time highs right now, that difference. So I think that you're going to have, more people that are going to choose to rent because they don't have the cash down, or it's too costly to buy. And then if we go into a recession, what happens during recessions? Well, people lose their jobs. They can't afford the mortgage. They sell the house, and then they have to go and rent. So I'm a believer that, fundamentals support multifamily going forward, but I'm also a realist that there could be, a downturn.
Yeah, that's kind of been my sentiment. It's the long-term outlook seems very favorable, just with supply and demand and just basic fundamentals with housing and affordability. But the short term, debt's really the challenge. Is managing the debt.
That's the challenge. And what I've seen people getting deals done today are, a lot of people are doing deals with, assuming
Yep.
the loans on other deals.
Mm-hmm.
And what I would tell listeners is, it's probably a great time for first time investors because there's not as much competition. There's a lot of people that have pulled back and they're like, hey, I'm going to wait until the dust settles. Well, when the dust settles, everybody piles back in. And then you, as the first time investor, are going to be at the back of the line.
Yeah.
Like the broker's not going to pick you. But right now they're spending time with a lot more buying groups because there's, a lot of people have backed off.
Yeah, I would imagine that'd be especially true with small multifamily, with mom and pop owners too, especially owners that are retiring.
Absolutely. I'm not in that creative finance world, but in the small multifamily, it may be an opportunity to get sellers to do seller financing. you know,
Mm-hmm.
and so you have to put less money down and you get into the deal, you solve their problem. They want to get out and they can't because of the finance markets and you give them their price, but you know, they do seller financing. You